a descending, right, at a downward angle, it would be a bullish pattern. However, because it formed at an upward slope, it's actually an exhaustion pattern. All right, so what I did is I waited for the market to close here, and then I sold up here. Okay, so I sold here, and I had levels at the time. I had levels drawn right here, and I also had a level down in this area here, because you'll notice that we had this low and this high. So this was a bit of a pivot for the pair, and we also had these highs back here and these lows. Okay, so remember, I had my first position was up here, and my target for this trade was actually in this area. It was the second level. The reason it wasn't this first level is because the market had spent several weeks rallying, and I said, you know what, if this thing is going to break down, it's probably going to go lower than this first level right here. So I had trailed my stop on this day when the market sold off. I did start trailing my stop loss. However, my target was down here. All right, so this was the final target, and the entry was up here. All right, so once the market closed below this level, I said, all right, you know what? I'm going to look for another sell signal on a retest of this key level. And notice that we got a bearish pin bar right here. So using the 50% entry strategy, I entered short here. So now I've got two positions on with the same target. So the way this works out is, let me just go ahead and clear this off and show you the numbers. So the first entry up here, stop loss went above that candle high. My target was down here. Second entry. All right, so this right here was a 30 pip stop loss. This target down here was 160 pips. Okay, so that right there was a 5.3 R. Now this next position was also a 30 pip stop, and to this target right here was about 100 pips. It was just shy about 95 pips or so. So that works out to about another 3 R. Okay, so another 3 R, and this one was 5.3 R. So you can see how this works out, that the initial trade was a 5.3 R, which is not bad at all, because that means if I were risking 1% of my account balance, that would be a 5.3% profit. And considering this only took, let's see, 6 days to play out, a 5.3% profit in 6 days is nothing to sneeze at. However, once I added that second position, right, we changed that into an 8.3 R setup. So I essentially increased, if I was risking 1%, I increased my profit potential by 3%. And again, the beauty of it is once I trailed my stop up here, I was in a break-even trade. So I couldn't lose on this. So I basically added 3% profit potential and also capped my risk so that I wouldn't lose any additional money. So you can see how this can be really, really profitable. As always, folks, just keep it simple, and also stick to the daily time frame if you're just starting out. You can get into the 4-hour time frame, but I really advise those just starting out to stick to the daily and weekly time frames. And then as you get really good, you can drop down to the 4-hour. So what's next? Well, it's my hope that you're going to take at least one thing from today's training and implement it into your trading style, because if you do, I can guarantee that it's going to improve your results. All right, I know this stuff works, but the reality is that these are just a few of the strategies and techniques that I use on a daily basis. There's no way I can pack over a decade of experience into a 1-hour block. And also the fact that knowing is not enough. You can know all there is to know about trading price action. The key is to be able to implement it and execute it effectively. And that's why I created the Forex Price Action course and community. It allows me to not just teach, but also guide members through the learning process. Now, before I take you inside the members area, let me show you what 3 members have had to say about the program. David from the US says he gained more knowledge in just a few months than he did in the previous 18 months spent with indicator-based systems. He also says that I teach support and resistance unlike any other site he had seen. Clayton from the UK says that price action is in his blood now. He actually messaged me about a week after he joined and told me how glad he was he found his style in price action. And he also learned the importance of 2R or better when it comes to risk to reward ratios. And Dave from the UK joined me back in 2014, and he still posts inside the forums a few times a week. And he says that it's one of the best investments he's ever made, and that not one day passes without learning something new.